All right, I'm welcome back for another episode of Carnivore Trade. Today is Thursday, February 17th, 2022. So big down day on Wall Street here. Triple Q's down almost 3% right now. S&P down 2, Dow down 1 3/4. So a big hit across the board right now. James Bullard came out earlier this morning, and I gotta apologize for the comments earlier this week. He did not cover his shorts Monday. He still has them, just so everybody's aware. He did. He still has his short positions, and he still is holding his puts. That said, he came out this morning, and he really just kind of drubbed the market. He did the same thing last week. It's really more of the same stuff. We need to aggressively raise rates, etc. We're behind the curve by this much, and so on. And that was kind of obviously that spooked the market. We also had a report last night, late last night. It was over sometime in the midnight or in the overnight there, that some Ukrainian army had fired off some mortars or something towards the border. I don't even think that claim was substantiated, but it caused the futures to sell off anyway. And the market's going to do what it wants to do. We already know that. Regardless, it just looks for an excuse to move. But there you have it here. So down 2% here and starting to flush it a little bit into the close. We still have about 30 minutes left in the trading day. I'm getting this video out a little early as I'm doing a live stream for the members. Then I got some engagements later on. But in any case, we'll walk you through the close here. So we talked about OPEX being a big part of obviously the action, the volatility this week. We talked about that 450 straddle. That looks like it's off the table now. Pretty surprising, but a lot of the action today is just driven by futures. It's not really options trading, except with the exception of the last 30 or 40 minutes. So there's been a lot of put blocks going off here. But for the most part, it was futures driven. So it doesn't appear to be options driven. There still is that 450 straddle though. And obviously now it's probably about more than 2% out of the way. It's easily more than 2% out of the way now. Could we still possibly get up there in this market? I really would not rule it out. It would not surprise me for them to just rip this thing right back higher, although it is a really long way away. I mean, they'd have to rally this thing into the close, and then we'd have to gap up on major news tomorrow just to get up into that straddle area. But it is still there. Obviously, geopolitical events can spook the market and essentially negate OPEX in a way. If the market makers and the big boys determine that more money can be made pushing the market down instead of collecting that premium, then that's what they're going to do. So that's just the bottom line. But anyways, big move down here on the spiders and the markets. So let's take a look. So the daily here, we had this gap fill. We kind of crashed through that. This was kind of that old support there, the 440 area. And then we had the gap through. We kind of crashed through that. Wondering if we maybe get a little bit of a relief bid into the close here. But through that, you probably down to about 435, which is this pivot low here. And then through that, you're really down to like that 432 area there on the spiders. I want to point out this potential kind of wedge here on the triple Q. So this is one thing that could potentially give the market a bounce here. So there is this kind of wedge pattern starting to form on the triple Qs. So if we get a bid here, it's possible we could trade back up to that downsloping trend line there, or perhaps maybe we break down and maybe go down and test the lows. You can actually see it a little bit better here on the NQ. I already have it drawn in, but nice little clean wedge pattern there. So it'll be interesting to see if we react off that line, or if we if we gap below that, then you got to think we're going to go down and test this low again. I still don't think clearly this market's been under a lot more pressure than I anticipated. I knew we were going to have a turbulent year, and I knew you guys know I've been predicting a very turbulent first half of the year. I actually thought that we'd at least get a continuation move off of off the floor. Usually you get some type of an ABC up. It's still not completely ruled out. I wouldn't completely rule it out, but this market is under a lot of pressure right now, and we got to respect that. But that said, I still don't think that this level will get taken out immediately. And a really good example of that would be the IGV here. So, and I was actually, I talked about this to members. I talked about this in the videos pretty much every week as well. But you had this big sharp move down, and then look at this tail candle, and this candle here coinciding with that daily 200. You come up, you test a double bottom, then you make your lower high, then you come down. When you put in a significant pivot low like that, it's very rare that it can just be taken out without at least a double bottom, some type of a lower high afterward. So I still think the market still probably has at least some type of a bounce in it. We're not going to take out that 420 low here on the spiders, unless, all hell breaks loose. There's always that black swan possibility, but you know, bears are in control right now, and you've got to respect that, bottom line. Anyways, let's talk about the Russell here, move over. So Russell's still actually holding up okay. I mean, it is negative today, still down 2.5, which is, you know, not as big of a move for the Russell. Russell's a little bit more higher beta, but, you know, still holding this gap here. It hasn't actually even tested that gap at 268. I think the low of the day, 278. So we just got basically to that gap fill here on the Russell, but all the other indexes, especially the triple Qs and the spiders, actually just crashed through their gap from last week. So actually from Monday rather. So Russell actually continuing to hold up a little bit here. How much does that mean? I don't really know. I mean, yes, it's a bullish indicator that small caps are holding up, and we've been pointing that out lately. But you know, you gotta call a spade here. The market's getting beaten down pretty hard today. Dow Jones here, so that's clinging onto this pivot from Monday. Still holding up all right. It's got a ton of support in this area, but if we drip down, you know, we're probably going to have to go down and test maybe that 338 area, 340. But the Dow is the strongest of the four major indices. You guys know that. All right, so flip over semiconductors down 3.5% here. Nvidia couldn't even save them. Nvidia actually came right back down here. So big, nice pop on Tuesday, up 9%. Managed to close flat yesterday, and then kind of had like a nothing burger on earnings, kind of drifted flattish to negative in the after hours, and then a gap down today. And you know, the selling was just not enough to keep it up here. You did get above this red bar high, so you negated that inside bar, and you're getting some support on gap fill. So Nvidia is still a pretty strong horse here, at least in the tech sector. So you know, I mean, we won't make too much out of it, but you know, it's a strong name, and we'll give it the benefit of the doubt. But the rest of the semiconductors, not so much here. Pretty ugly day here. You are a little bit away from gap fill though, so that's kind of what I'm using to gauge the strength of all these sectors, is which ones are hitting their gaps, which ones are getting through the gap from Monday, and which ones are not even there. So I mean, you know, semiconductors, you know, holding up all right. IGV on the other hand is not. So IGV completely crashed through really last week's lows and is really now testing the lows from late January. Salesforce, Oracle, Adobe, ugly moves across the board here. ServiceNow actually holding up okay. Cloudflare, all right, but some of the big market leaders, the Adobes, the Oracles, just getting brutalized here, and really ugly move here. And we've been talking about this for a while. The cloud stocks have been one of the leaders lower in tech here. Anyways, let's move over to transports. So transports kind of had this inside bar, 1, 2, 3 pullback, and now a bit of a move down. We'll see if this continues tomorrow. If we gap down, this could probably get down to, I'd say, probably that 14,250 handle. I wouldn't rule that out. I mean, I know that there's this, we got that pivot there, but this isn't nearly as strong of a pivot as one we saw on the spiders and the triple Qs back there. But that's a nice little inside bar there, and a continuation down. Again, it's got to hold this 14.9 area. If you can hold that, then maybe you can be safe for a while. But obviously not the greatest look. Dow Transport's down over 1.5%. Home builders getting hit as well, although they're still holding on to these pivots here. But we've been talking about this for a while. This is a weak sector. VNQ getting hit, even with rates pulling back a little bit today. We're seeing bonds get bid here. Won't make too much out of it. It hasn't broken trend yet, so we'll kind of leave it at that. It's probably overdue for a pullback. Bond yields have been really overbought here. We've been talking about them going higher for a while here, but they are getting a little long in the tooth. But with that said, the home builders just with everything red as is today, still not even able to get a bid, even with bonds bidding a little bit here. Let's move over and talk about financials. So XLF down. Cutting through some of these moving averages here. Broker dealers taking a big hit. So broker dealers down over 2.5% here. Morgan Stanley, a big loser, cutting through all four moving averages, down almost 5% on the day. It'll be interesting. We got about 15 minutes left here. Maybe they can save it before the close, but this thing is getting hit here. So we'll have to watch this tomorrow. If this can confirm below that 200 and you take out these pivots, it's got a lot lower to go. But pretty much across the board, every sector getting hit today. The only really exception is energy. And energy really just having kind of a quiet day. XOP basically flattish. Same thing with XLE, OIH. Also, slightly lower, but kind of inside of yesterday's move. But at the same time, they're not really doing the S&P any favors. Typically when tech gets hit, energy can get a bid, and sometimes it can help out the overall market. But we're not seeing that today. Energy is not really helping out. The one thing that is notable about energy today is crude And I pointed this out yesterday. I was like, how long has it been since crude has touched its 20-day moving average? You got to go back to December 21st. Well, today we finally touched the 20 moving average, which is basically an oversold condition at this point for crude. But nice little bounce there off the 20 MA. I'm still finishing red here on the session, but again, it's got to take out the 20 MA before we even talk about it going into corrective mode here. And it is pulling back, obviously, with bond yields a little bit lower. That positive correlation is still definitely in play. Nat gas, not a whole lot going on, but just to piggyback on yesterday. So we stalled out at that 100 moving average and then pulling back a little bit today with a little red candle here. Maybe if it starts to consolidate sideways, you could get a bullish pattern and it could possibly pop up to 525. But right now, there's just nothing to do with it. Dollar index, very quiet today. Very quiet considering how much of a risk-off move we had. So very odd to see that. But, it did have a move up, a little 1, 2, 3 pullback. So maybe it pops a little bit tomorrow if we go really red and flush tomorrow on the spiders. So gold, got to talk about gold here. So continuing to bid higher. Is this a fear trade? Is this, I know there's a lot of stuff going on in Canada. There's talk about bank runs. Maybe that has something to do with it. Point is, gold is moving higher and we'll respect it for right now. But I want to point out, we got to get above 1919 spot 2. If we can close above that by the end of the month or on the end of the month, if we're above that, gold will go right up to all-time highs very fast. But that is the major level. It's going to have a ton. This is a wall of resistance up here. And we are a little overbought going into that. So don't expect it to just gap higher and gap to new all-time highs. Be realistic about it. But this is going to be a fight. And we'll see what happens after OPEX week because we've seen them do it 3 or 4 times in the past year where they dump it the very next week after OPEX. We'll keep an eye on that. But gold is holding up really well right now. Another positive for it is GDX. Look at the power bar here on GDX, up over 4% here, and really challenging this high. Again, this is going to be resistance, but a nice power move, and you got good volume behind it. So we'll give it the benefit of the doubt for now. Silver has been a bit of a laggard. It's, gold has been a fear trade right now. Silver is a little bit less of a monetary metal, so it makes sense that it is underperforming in this situation, but it is still green today nonetheless. Platinum also following through with yesterday, so that's confirmation there. This should get up. I would think this pierces double top here. You probably get up to 1125. This is a nice powerful move here. You got good volume behind it. I think platinum can at least pierce this double top, but nice little move there. And I've been watching that pattern for weeks now. Just the reward was not good enough. It's 7 or 8%, maybe 9 is kind of like your max upside. And I typically look for something a little bit more than that. But either way, nice little pattern there. Palladium still kind of hanging in there, getting a bid. And I still like this weekly chart pattern here. That is very good there on palladium. Copper, a little bit of an inside bar. Kind of looks like the Dow Transports chart, like that down, 1, 2, 3 down, and then a 1, 2, 3 up, and then a down move today. So we'll see. Maybe it pulls back again tomorrow. Either way, it's still range bound, and here are the main levels. You guys know that nothing's really changed there. Talking about Bitcoin now. So Bitcoin flushing with everything else. Ether down 6%, Bitcoin down 6%, Doge down 5%, Litecoin down 8%. You get the idea. And just pulling back like everything else is, and just behaving like normal, really. So we'll see what happens here. Your support on the downside is going to be around 39,000. So I don't expect that. Expect Bitcoin to get a bounce in that area if it were to continue lower. And if you get through that, maybe you got this little pivot here, a minor pivot around 36, and then it's really double bottom. But for right now, it's taking out these lows. I think it probably wants to go down and test that 39 handle in the short term. Anyways, to wrap up here, let's flip back over. See the intraday. So market's getting a little bit of a bounce here into the close. There's about 10 minutes left. I don't know if I'd make too much out of it. The bears have been in control all day long, and really for the last couple of weeks. Every time we get a bounce, they flush it back down. And yes, on the other side of that, the bulls have been able to push it back up in support areas, and it's been kind of a tug of war. But you really get the sense here that the bears are in control right now. And if we can't reverse this by tomorrow, we probably are going to have to go down and test those levels. The low 430s, 432, 435 in that area on the spiders. Anyways, guys, I'm going to wrap it up here. We got to get ready for a live stream shortly. You guys take care. Thanks for watching, and I will talk to you all tomorrow.